Hello traders everyone, welcome to our new webinar here on YouTube. So let me know please if everything works fine, if we are live. So if you can see my screen, if you're here on YouTube, please let me know in the chat box on your right. So looks like that I believe that everything is fine. So we are streaming from a new different software this time, so I hope that everything will run smoothly today with no issues. I hope that sound is also okay. Okay, so thank you for joining our webinar here first time this year. So I hope that you had a pretty good holidays and that you spent some time well away from the markets and that you're ready for some new stories here for 2024. So I wish you all the best and good luck this year. So as always, I will walk you through some of the markets for the start of the week. As you know, we have inflation report from the US this week, which will most likely be a very important driver for the markets, but I believe that this one is on Wednesday or Thursday. Also, we got on Friday, we got the non-farm payrolls report, which were pretty strong. The US dollar could for now stay in uptrend, but if really maybe this strong dollar move should remain in place at least for January. Now will also depend on inflation. So if the inflation would really come to the upside once more, then maybe traders, investors went too aggressive regarding potential call for the cuts of from the Fed this year, and maybe market should do some repricing. Before we go to some of the charts, let me still invite you to maybe to check, if you didn't check this video yet, from 2 weeks back. So we have this Elliott wave market outlook for 2024. So make sure to check this out to see maybe where my bias are and why I'm looking for any kind of a direction of this market, why I think that maybe stock market could, at least for the first part of the year, stay in uptrend, what this means for the US dollar yields and so on. Okay. Okay, so now let's start with dollar index. Okay, so dollar index, in my opinion, here is trading to the downside. It's bearish, and we have been tracking this ABC correction for a while. It was a flat, and now I believe that we are here moving to the downside. So I assume that this is an impulse and that we will see more weakness. Also keep in mind that at the start of the year there will be portfolio adjustments. Some will book profits from stocks at the start of this year rather than booked at the end of the year, because they want to avoid some taxes. So that's why you may see this that's why we are seeing these volatile price actions. That's why we are seeing probably move to the downside on stocks into a pullback, while some of the money obviously moves into cash, and that's why we are seeing US dollar. And now at the end, also at the end of the week, last week, when we got this non-farm payrolls report very strong, I believe the unemployment rate came down to 3.7%. Of course, this could keep dollar still in this temporary recovery mode, but the important is to understand that this is the temporary recovery. So I still think that January, which historically has been bullish for US dollar, because historically that's when stocks have seen a pullback. So maybe this is now just the beginning of the year, where the price action may actually be reversed or change still in weeks ahead. Okay, so for now what I'm tracking here is a corrective price action. I think that whenever we will see a nice ABC movement to the upside, potentially towards 104 area, that's the very nice resistance up there, from where I would be expecting more weakness. Okay, so again, this is the temporary corrective rise. So longer term, I'm still bearish US dollar, but I'm just aware that maybe this dollar index could potentially see more upside. I don't believe that we will see any kind of a real breakout. Still, we get inflation data maybe in a few days. Okay, that's when maybe traders, investors will be ready to decide whenever they should maybe expecting higher for longer from the Fed, or maybe they will really start considering cuts. Okay. Also, looking at the 4-hour time frame, what is really important on this one here is that I believe that we have this impulsive reaction to the upside. Okay, so if you are maybe bullish on US dollar, maybe in the short term for the intraday price action, there can be some setups on longs of the US dollar, but keep in mind that this is only temporary recovery. As I said earlier, very big move in my opinion will still be to the downside, but as I said, that's still ongoing process for now. Okay, you still need to see this ABC recovery back to 104, 104.30 resistance before we would consider more weakness. So if you want to be maybe long US dollar, because I believe that this current correction will extend even higher, so if you want to be long US dollar, you really have to be careful what you want to trade. Okay, obviously you want to be trading US dollar versus weak currencies. And which are weak currencies? Well, you should do some comparison between the FX rates. Okay, now also if we maybe take a look on the US yields, which by the way is going to be a very important market mover for this week as well. So US dollar, as I said, it's in a temporary corrective movement. Okay, so what we would expect in ideal scenario, that when the correction is completed on dollar index and we'll see move to the downside, that's when the US yields will also start moving lower, right? And here we are currently testing this trend line support of this impulse channel. So maybe that's now some minor intraday consolidation as well going on here on the US yields that could potentially keep dollar index above the support. But eventually at some point I will be expecting much weaker US dollar based on these US yields, which I believe that they will continue to the downside. Maybe if inflation, let's say in the US, will jump, the expectations are for 3.2% from 3.1. So if inflation comes above that level, then we know that maybe US yields will stay in this consolidation. So maybe even wave B, higher degree, could unfold at some point. Okay, but generally speaking, I think that will be only temporary pause within this ongoing weakness. Okay, now if we take a look also on euro dollar. Now euro dollar, in my opinion, is also in a corrective pullback. We have everything what we need to see here on this daily time frame. Notice that here we have a pretty nice 5 waves to the upside. That's a 5-wave movement here, and then we have seen this ABC flat correction. Okay, so market basically in 2023 didn't move much. We have seen some very volatile moves, but prices actually didn't go far. Okay, but what we are seeing now, it's some very interesting price action for the bullish trend. We have a pretty nice 5 waves up, followed by an ABC setback that is now in progress. Now, if we are in a wave 2, then we know that wave 2 can retrace all the way back, but not more than 100% of these 5 waves up. But the most important will be the support area of a former wave 4. So I think that 107, 108, that's the first interesting area. And if we switch to a smaller time frame, you can see that that's an impulsive drop on a smaller time frame. So again, it signals that this wave 2 should be deeper and it's still ongoing correction. Okay, so again, maybe some will look for potential shorts on here on the intraday basis on the euro dollar pair, but again, keep in mind that maybe the ECB is much more hawkish compared to the Fed. Okay, and this is definitely something that you have to consider because these divergences between central banks are driving the markets. Okay, now also what is going to be a mover this week is probably cable, keep in mind that traders, investors are wondering what will be the figures from the UK regarding the GDP. If there will be a contraction, potential signs of the recession, then you know that cable will come to the downside, because Bank of England is maybe too hawkish for higher for longer. If really maybe GDP would come to the downside, okay, lower than expected, then sentiment will most likely turn around here, okay. However, from an Elliott wave perspective, I have to say that we have a pretty nice and strong uptrend still here since October of 2023. So I think that more upside here is certainly possible, but I'm not sure if maybe this triangle that I'm tracking will be broken before we get the GDP figures. I think that that's, let me check. I think that's for GDP. I think it's on Friday. Okay, so we have still plenty of time maybe for this consolidation to be broken to the upside, and then we know if the prices moves out of a triangle, there can be limited upside. So even if we see break higher, just be aware that if GDP disappoints, we could see a pullback and a massive reversal, not only maybe on cable versus US dollar, especially on crosses as well. Okay, especially like maybe pound yen. That's one, this one is very interesting that I will also check later on. Okay, now let's take a look also on Aussie. Now also inflation from Australia will be released, these figures, on Wednesday. Expectations are 4.5%. Previous reading was 4.9%. Okay, so again, they are expecting inflation to come lower, but still, Bank of Australia, they actually noted that they could and considered potential another 25 basis point increase. Okay, so maybe this next data will be important decision maker for RBI, either to lift rates further or no. But longer term, again, I think that Australian dollar could do much better versus US dollar because of this divergence between Central Bank of Australia and Fed. So I think that Aussie could stay in uptrend, but what I'm looking at here is still maybe a new ongoing correction. Okay, we have seen a pretty nice break to the upside out of this corrective channel. That was a very nice impulse, and now we are in a corrective phase. So I think that this wave 2 is in progress and potentially could retest this trend line from the outside. So watch out, maybe 65.60 as a very nice support. So again, I think that there is room for more weakness, because if you look at the intraday charts, okay, that's an impulsive reaction, and I already identified potential resistance levels here for the next intraday corrective rally. Okay, so I will be looking for more short-term weakness, and maybe this inflation data will really be the next catalyst for potential deeper correction of wave 2. But if inflation, let's say, will not come down to 4.5%, maybe only to, let's say, 4.6, or maybe even similar like the previous reading, then I think that Australian dollar will explode to the upside. But in such case, okay, then maybe watch at some crosses. Then I think that Aussie could really do much better or be very interesting versus crosses, because I still think that this is just wave A of a free wave correction. Okay, so I really think that the next potential rise here could be only wave B rally, and that's why I'm saying if maybe inflation will come to the upside in Australia and I do not see a completed corrective pattern here, then I will maybe rather switch on some crosses like Aussie versus Kiwi. Now this one is very interesting. It has a potential very nice bullish developments short term. What we are looking here is a very nice ABC setback, broken trend line, and now corrective pullback. So I think that that's very nice potential support, at least for the week. So we'll see if this inflation data could really move the Australian dollar. Now on the opposite side of this, also looking at New Zealand dollar versus versus US dollar, where it is. Okay, here it is. This one is obviously also, in my opinion, in a corrective price action. Okay, so this one should be deeper. I think that that's wave A of a free wave structure here. Can be wave 4, can be even higher degree wave 2, but in either case, that's a very nice support around 60 to 6100, around that area. Okay, but we still have some room left for this correction to unfold, because in my opinion that's the first impulse. So if you're looking for some very short-term intraday price action, maybe these levels will be important for you. If you are looking and patiently waiting for a longer term, or maybe you're a swing trader and waiting for some setups that will last maybe for a few weeks if not more, then of course you will wait patiently on these lower on these lower support levels. So looking at these levels, if we really can move down towards these supports here, then I think that this will set up a very nice potential trade within uptrend, because I think that the recovery has started and that we have a low in place here on October 2023. Okay, so that's for Aussie and Kiwi. Also, let's take a quick look at dollar yen. Hello guys, I can see, sorry I missed the chat earlier. Hello Victor, Tim is here, Brian is here, Wonka, our member, is here, Oleg as well as always. So thank you guys for joining, and of course Oleg, I also wish you all the best in 2024. Okay, so dollar yen, this one in my opinion is going to be a very volatile year for sure. As you know, investors are waiting whenever Bank of Japan is finally going to change their policy. It could happen maybe in March. It could be even surprised, as suggested or slightly noted by Bank of Japan. So whenever if this will happen, we know that Japanese yen could strengthen across the board, and also we already have the US yields coming to the downside. So on the top of that, if we will also now have Bank of Japan trying to change their policy, then this will be just another fuel on Japanese yen strength. So I think that Japanese yen has a lot more upside potential. Also, we have a very nice broken trend line support, so I think that more weakness here can be seen after this consolidation is finished. I think that very nice resistance is around 147, but of course after a free wave rally, let me just illustrate this for you. So if we see a free wave rally towards 147, I think that this could be some very nice resistance up here from where I would be expecting more weakness here. So as said earlier, maybe pound yen can be very interesting if GDP would really disappoint, come lower than expected, if there will be shift in sentiment, that maybe investors who already are pricing, I think that 125 basis point cuts for 2024 from Bank of England, then of course if GDP would come to the downside, this would even increase the odds that cuts may occur. And in such case, pound yen, I think, could see a very nice shift to the downside. Okay, so if pound comes to lower after GDP this week, then a week later we could see a very nice turns on pound, but I would not be looking for cable. I would most likely look for pound yen weakness. Okay, so on pound yen, generally speaking, we have a very nice move to the downside here, and now we are in a consolidation. So I think that this could be a wave B rally, because this first drop was very strong and sharp one, can be impulsive. So I'm thinking about more weakness here into this wave C. Also potential head and shoulder stop formation can be unfolding as well here if you look closely. Okay, so as long as we are here below, this was November of 2023 highs, I think that there is more downside potential. Okay. Okay, now let's take a look on gold. So as I said already at the start of December, I believe that gold will either stay sideways or even bearish, since we have seen that fake out here on December 04, okay, on Monday. So we have seen a fake outs. There was a lot of FOMO. There was a lot of rush into longs, and then market unexpectedly reversed to the downside. A lot of positions on the long side were liquidated, and normally when market makes this repricing, we are seeing consolidations. And what I see here is a very nice wave A. Now you are in wave, then we have seen this wave B rally, and now I think that we are going to see wave C weakness. We are already seeing some very nice move to the downside here over the last few sessions, and with dollar index strength, which in my opinion is still in just one part of this higher degree correction that can extend towards 104, I think that wave C here to the downside could definitely be much deeper. So I'm looking for these levels to be retested at some point from this mid of December at 1970, okay, or potentially even lower. Also, if we look at silver, now silver is also coming to the downside. We are still tracking here very big triangle pattern, so we are actually observing the sub waves within very big ranges, but I think that there is room in the short term to see a retest of $22. So we'll see what happens down there. We have a potential lower side of very big triangle around $22 or $21.80, so that's the key support if we really are already in wave V of that triangle. So I will closely observe the price action in that area, okay? So if we see potential bounce from there in impulsive fashion, I think that this could be quite interesting for silver. But I still think that even if silver will recover, of course gold could do the same thing, but generally speaking, silver in uptrend, whenever metals are in uptrends, silver usually outperform gold, okay? So I really think that silver can be very interesting this year, especially if maybe something unexpectedly happen, if investors will rush into metals. I think that silver has a very nice upside potential, much bigger one compared to gold. Okay, now let's take a look also on the S&P 500. So the S&P 500, here we have still ongoing strength. Let me check something here. Okay, so here we have this seasonality chart from equityclock.com. So what we are seeing here is at the bottom of this graph, you can see that we have in January, what we are seeing is a very deep pullback, right? And this pullback represents the risk off, and that's when US dollar will most likely move into a higher correction, which is, by the way, is happening. So I think that this still this correction is underway and could be a little bit deeper, because we are seeing drop from the highs quite sharp here, okay? So I would assume that that's the first leg of a higher degree correction. So definitely I'm still looking for this to be a correction, but I'm just aware that maybe this one can be deeper than I firstly thought. Firstly, I thought that this 4700 will be the first support. Can still be the case, but when I scanned some other indexes through, I just really think that maybe it's good to be aware that wave 4 can be much deeper. So first support 4700, deeper one is 4600. It's also the 38.2% that comes in very close to this consolidation that goes back to start of December, end of November, okay? So this area can be very attractive. So again, it will be all about traders, investors' reaction to the inflation report that we will get in the mid of the week, okay? I think that this will be the next very important economic event that could potentially define the next moves here. But from an Elliott wave perspective, we are in uptrend. You don't want to fight this until we see some very strong and deep invalidation levels broken. So I still think it's very healthy to stay with this uptrend after any kind of a free wave drop, because by the way, we were trading at all-time highs, so not really sure why you want to fight this. but of course it would be much more interesting to be long if you see a corrective setback first. Okay. Okay, now finally let's take a look on cryptocurrencies. We will look at Bitcoin. So once again, if you, not once again because I didn't set this yet today, if you're a first time visitor, first time here on YouTube, please subscribe to our channel, leave us a comment here, press a like, and support our work so that we will share more of this content in the future. Okay. Now, as I said, we will take a look on Bitcoin. Okay, so Bitcoin is, you know, Wednesday, Thursday, I think that we will finally get more details regarding the ETF. So market is obviously consolidating. Last week we got some reports that the ETF will not be approved, and that's when a lot of liquidations occurred. But still, market was able to recover, obviously, because nothing is confirmed. So market is still looking for stable prices, at least at this stage. And if we consider the Elliott wave principle here, I think that that's still healthy ongoing consolidation, can be an ABCDE triangle. Ideally, wave E will still unfold here because there's still a few days left. There will be even more volatile price action in both directions, I believe, before we get more details here. So I'm just aware that maybe even 42,000 could still be retested. Also, if we look here at liquidations map, that's by the way going to coinglass.com. So if you look here, you can actually see that that there are plenty of liquidations, plenty of stops here around 42,000. I think that I already talked about this, and I also posted this on Twitter. So around 42,000, there are plenty of stops. So someone is long. And what I see here, you can see that also plenty of liquidations here on the long side for those who were short already occurred here. Okay, so I think that that's a pretty interesting resistance up here around 45,000. So if we really are going to see suddenly, I'm not sure if this will happen, but if prices would really come to the downside towards 42,000, and these liquidations will occur, if stops will be out from those who are now long, unfortunately that's how market works, then this could be a very nice potential support. And ideally, this will be after this wave E will unfold. Okay, so timing is also interesting and perfect. But on the other hand, we have to keep in mind that cryptocurrencies in general, they have seen a pretty strong move over the last few months on speculations that ETF will be approved. So there were a lot of traders, especially in futures market, who were buying this market. So of course, when news comes out, they will be looking to liquidate a lot of their positions, because market after all already made a pretty nice move to the upside. So also be aware of buy the rumor, sell the news impact as well. So when I would be looking for this kind of reaction, well, what if the triangle is already completed possibly? Okay, and then you see a strong move to the upside, everyone will get excited because the ETF will be approved or whatever, and then what you see, well, a lot of traders will jump into the market. There will be probably even more traders that will try to join this uptrend on the price that will break higher, but unfortunately there will be a little bit too late to this game, and market could actually make a very nice unexpected reversal later on. Okay, so just keep in mind that there cannot be just a very simple price action here to follow, and that we have to be open-minded and be aware of more different scenarios here as well. Okay, so that's for Bitcoin. Also, I have here, let me just check. Okay, so this one is this chart is also interesting. It's the crypto total market cap, but excluding the top 10 cryptocurrencies. Okay, so what you're seeing here is a very nice retracement. We still have maybe some room to make this pullback. But why this one is interesting is because I think it's in a correction and it will see more upside. So maybe there will be some altcoins that could see some very nice upside potential. Okay, even maybe if ETF will if maybe cryptos in Bitcoin in general will come to the downside, maybe there will be more risk on Bitcoin compared to altcoins. Okay, so I still think that cryptos in general, of course, are in uptrends, but you will have to be very selective whenever you want to pick some of the coins on the upside. Okay, traders, that's it from me. I hope that you enjoyed this video. This webinar. Let me just see. Someone is saying oil couldn't break above 75, so not good. Yes, crude oil, in my opinion, is sideways here. I was looking for 74 or 75 to be a breakout point to the upside. It's still not happening. Maybe this will happen this week, but keep in mind that if the energy prices will move to the upside, this can actually be bullish or positive for the US dollar. Okay, not bearish, because we know that higher energy means higher production costs, and this means higher inflation. Higher inflation means higher US yields. Higher US yields means higher US dollar. Okay, so this is something that you have to consider. Okay, traders, so once again, I welcome you to our next webinar, which I believe will be next Monday. Again, we still have these New Year sale offers. So whenever, if you're interested in our services, we have New Year sale offers. You can get discount for yearly membership or for a monthly membership. For the first month, you will get 2 months. Okay, so traders, again, be careful out there. Inflation's data will be the main drivers of the week, and I hope that you will trade well, and don't forget to put your stop losses in place. Traders, have a good day. Bye.